Okay, let's start, right? 2 minutes. DMW, hello, how are you? Good morning, good evening, good afternoon, everybody. So today we are going to continue from here, right? And let me just check something, everybody. Just give me a second. Aito Crib, hello, how are you? Okay, everybody, let's start, right? Welcome, everybody. This is Forex Trading Course 101 for beginners, and this is Fxpassion broadcasting you live on TradingView. If this is your first time, everybody, what we are trying to do here, we are trying to build the 3 pillars. Pillar number 1 of a beginner trader, everybody. This is a beginner's course, okay? Pillar number 1 is a strategy and or a system. We're trying to build a strategy and or a system that it's easy for a beginner trader to understand. And we are trying to do this with these modules here on the left. Pillar number 2, we are trying to understand how risk management works inside our strategy and or system. And pillar number 3 is the big one, is the psychology part. We're trying to understand how psychology affects our risk management decisions, how psychology affects our decisions on entries, trade management, and so on and so on. Never forget, everybody, 90% of traders lose money in the Forex market worldwide. Okay, it's just a matter of time. Somebody is going to lose in 3 months, somebody is going to lose in 6 months, somebody is going to lose in a year. Okay, doesn't matter, Japan, Brazil, Alaska, USA, Europe, you know, Ireland, whatever, Africa, 90% of traders lose money in the Forex market. And disclaimer, the webinars are not trading or investment advice. The webinars are for educational purposes only. Either way, don't trade with money you cannot afford to lose. And for questions or homeworks, TradingView house rules apply. You can contact me in private chat. Please allow 72 hours because, you know, we have other things to do. Okay, we are quite busy, but it's okay. And also you have the Gmail contact in the signature field. Okay, and never forget, having 2 skills is better than 1. Having 3 skills is better than 2, especially in times of uncertainty. And trading is a learnable skill. Sudwal, hello, how are you? How are you, sir, today? Okay, everybody, so let's start the lesson. Okay, and we are going to continue where we left yesterday. Okay, so we're going to do a trading exercise. Okay, and I'm going to delete this. I'm going to delete, and then we're going to move on. Okay, we are going to go on NZD-CAD daily chart, everybody. NZD-CAD daily chart. Okay, and where is the horizontal? Okay, so the horizontal line back in time, okay, it was like this, and we are not seeing the future, right? So back in time, the chart was like this, okay, and we learned about the market wave, okay, and we learned about market structure. So extension, retracement, extension. Agreed, everybody, that this is the first extension, retracement extension? Ali, we are great. Thank you very much. How are you? Do we agree, everybody, that the market was making lower lows, lower highs, lower lows, lower highs until here? Then the market changed the short-term trend start making higher highs, higher lows until here, and then change the short-term trend one more time and start to make lower lows, lower lows, lower highs, lower lows, lower highs until here, right? And then the market one more time. So we don't see the future, right? So one more time, the market starts to make higher highs, higher lows, higher highs, higher lows until here. Do we agree on that, everybody? If you learn this until now, you are doing great. If you learn this, everybody, how to spatially understand what is the market doing on the short term, what is the market doing on the long term, and what is structure or the market wave, okay, then you are doing great. So step by step, you know, if this is your first time, everybody, please go back to the recordings, okay, and watch from lesson number 1. Okay, if you are a beginner trader and this is your first time, everybody, is going to be complex for you to understand, because every lesson in this course we are trying to upgrade and upgrade and upgrade the knowledge. Pickle says yes. Okay, so now we are going to draw a trend line, something like this. Okay, so I'm going to delete this stuff, right? Okay, I'm going to delete this one. At least I'm going to delete the short-term trends. Okay, and so we don't see the future, and this was the chart back in time. Okay, and what we are going to do, we are going to draw the first trend line, something like this, and then we are going to draw another uptrend line, something like this. Okay, so yesterday we learned that the best entries are end of retracement. So, and don't be shy and don't be scared, everybody, there is no right or wrong. Okay, so let's make a poll, everybody. So number 1, who wants to enter short, meaning sell, right now? Question number 2, where would you put the stop loss and take profit? Okay, so let's start like this. So the lesson yesterday was how to trade the short-term trend inside the market structure. Today we are continuing the lesson with the live chart, okay, and we are doing a trading exercise. So who in here wants to enter short or sell right now? You know, right now. And remember, everybody, we are teaching you on the higher time frames because it's easier to see. But those concepts, formulas, ideas work on all time frames, all currency pairs. What you are seeing here on NZD daily chart, it's happening on 15-minute chart, 30-minute chart, 1-hour chart, 4-hour chart. Okay? Those are the same principles over and over and over. So everybody, who wants to short the market? You know, we are on NZD CAD. This was the live chart back in time, and we want to make some pips, right? So this is now the big picture. Who in here wants to enter short? Who in here wants to sell? And one more time, you know, talking about the stop loss, would you choose the stop loss number 1? And let's change colors. or would you choose the stop loss number 2? When going short, right? So stop loss number 1 in here. Okay, and we have, let me clone, and we have, oh yeah, let's make it bigger, sure. And we have stop loss number 2 in here. So who would enter, and where would you put your stop loss, and where would you put your profit take? Zuelius says short, stop loss number 2. Okay, what about the profit take, Zuelius? Where would you profit take? You can say, okay, I'm going to, you can say just graphically 1 versus 2, or, 2 times the stop loss. Great. So Zuelius entered here, and this would be his stop loss, something like this, and he wants to earn 2. So this would be 1, and clone one more time, clone. Okay, so this is Zuelius. Stop loss, take profit. Anybody else? Pickle stop loss number 2. Zenoa 2 times. Okay, DMW, I would go short stop loss number 2. Time freeze high, I would not enter. Great, great. Okay. Time freeze, would you go long or would you just stay out? Everybody? Okay, so most of you are stop loss number 2 and risk reward ratio. We want to earn 2. If I'm going to risk €1, 1 Bitcoin, $1, I want to make 2, right? What is the question? The question is, would you go short right now? And the second question is, where would you put the stop loss and take profit? Zenoa, those are the questions. I'm sorry, guys, if I don't pronounce your name correctly. Okay. So we are here, right? And stop loss number 2 is okay. Stop loss, we are here right now. Okay. Now we learned, everybody, in the previous lessons how to determine the trend. Stop loss below right. Would it be would it be more specific? Zenoa, what is below right? Everybody, we learned how to confirm the trend, right? So here is the question, everybody. Did the short-term trend change? Did the short-term trend change? Stop loss below 0.91799191. Zenoa, we are trying to go short, not long. We are trying to short the market. Okay, but it's still okay, if you want to go long. So there is no right or wrong, right? There is no right or wrong. Zenoa wants to go long, so let's put this in blue or something, and like this, and coordinate. So this would be the Zenoa stop loss. which is at 0.1763. No, don't be sorry, you know, there is no right or wrong. We are here to learn, you know. Okay, don't be sorry, everybody. We are here to learn. See, what is normal, everybody, what is normal and what is confusing is that we would learn, and we are going to learn in the future lessons, you know, we would learn about support and resistance, okay, and we would see something like this, okay, and we would say, and we would think, oh, this is, you know, it's a time to go long one more time. Yes or yes, everybody? You know, some of you are not beginners, some of you are more advanced, and you learn that, well, when the market's making hard highs, hard lows, and when it retraces, you know, then it's time to buy. And the answer is yes, if this is not an end of a down retracement. If this is the end of a down retracement, then we are going to lose. And this is why in the last 10 hours, and it was difficult, we were trying to teach you what is market structure, how the market behaves, how it works, how it moves. And you were sick and tired of me telling you the market must retrace and the market must make an extension, retracement, extension. It cannot move other way. It's a must. Okay? So beginner traders, when you are buying here, you know, it's normal. Okay? And you're going to lose. It's normal too. So we need to pay attention when we're trying to upgrade the knowledge, what is the market wave doing? So in the previous lesson, we learned about this, everybody, right? Now, talking about probabilities, you know, so yes, the short-term trend change, right? So the market is not making higher highs, higher lows anymore. It's making lower lows, lower highs. What about the trend line? We learned about the trend lines too. What are trend lines? Trend lines are tools that are confirming the trend. Trend lines are the tools that measure sentiment. Trend lines measure bull power, bear power. How do you know we are going to lose? Everything can change. Yes, but the answer is there are some patterns that has a statistical edge. Okay, Zenoa, how do you know that we're going to win or lose? We don't know for sure, but the Forex market is not new, you know, so we learned that exist in the market some technical patterns that have statistical edge. What is an edge? The pattern is going to win, you know, 8 times out of 10, 7 times out of 10. Make sense? Okay. And one of the patterns is structure. Another one is the market wave. Okay. And if it's confusing, everybody, if this is your first time with us, please go back to the recordings and start to learn, okay? Because it's going to get more and more and more, not more difficult, but more complex. Okay? Every time we're trying to upgrade your knowledge, but you need to follow the pace. You know, from one webinar to the another webinar to another webinar. Hopefully you do the homeworks. Okay? Great questions, Noah, okay? Everybody, don't be shy, don't be afraid. There is no right or wrong. You can ask anything, okay? No, not my age, you know, not my age, you know. You can ask anything about the market, but not, you know, oh, how old are you? No, this is not okay. Or how many dogs do you have? You know, no, not like this. But you can ask anything about the market, you know, not a problem. Okay, back to the trend lines, everybody. So yes, we have a change in the short-term trend. What about the uptrend line? So Zuelius, BMW, and Pickles, you are my teacher, I'm your student, and I'm not saying that you are wrong. I'm just saying, teachers, isn't this trade right now, isn't this short trade risky? Because we are still above the uptrend line? What would be the answer? So one more time, right? The short-term trend was up. The market was making higher highs, higher lows, higher highs, higher lows. And then the short-term trend changed. Okay, this is one. This short-term trend, this short-term uptrend is a part of the orange down structure. How can I make it bolder or bigger? Let me see, not this one, left, right, and style. Maybe here, bolder. Okay, no, I'm going to color. So this is extension, retracement, and we learned that by default, retracement are shorter or smaller. And this was the next extension, right? And all of this price movement in here was nothing more, I mean, is nothing more, because this is a trading exercise. All of this movement in here is a down retracement. Yes? And because this is down retracement, we are monitoring, you know, let's say that, okay, we are not suitable for the beginner trader to go against the structure or everything, you know, because this could be the 15-minute chart, this could be the 1-hour chart, whatever, you know, and then we are seeing something like this. So we are seeing a change in the short-term trend, but the market is still above the medium-term uptrend line. So would this be considered a risky trade, or should we enter? Should we stay out? Should we wait? What should we do? So BMW entered the market, Pickles entered the market, and Zuelius entered the market, you know, and I'm your student, and I'm asking you, teacher, isn't this risky? Zenoa says risky. Okay, so risky, okay, risky compared to what, right? How do you determine what is riskier, less risky, more risky? No, I'm not saying that you are wrong. I'm just asking questions, you know. I'm a beginner trader. I'm trying to learn how this works. So answer, everybody, you know, this trade, let me delete here a few things. Delete. So when you have extension, retracement, extension, and then you have something like this, right? Market making higher highs, higher lows, and then you have a change in the short-term trend, but the market may be still, you know, still above the uptrend line. Okay, still above the trend line. So can you go short? Yes, you can. But it's our decision, everybody. So if I am a risky trader, can I take this trade? Yes, I can. Now, if I want to be more conservative trader, I'm going to wait for the market to break the uptrend line, you know. And if I want to be even more conservative, I'm going to wait that the market makes another 2 lower lows, lower highs on the other side. So why is that? Because spatially I'm going to see easier. Oh, now I can see, you know, I can see that the short-term trend changed. Make sense, everybody? So in this sense, there is no right or wrong. Do we have the change in the short-term trend? Yes, we do. Number 2, should you enter? It's your decision. You can enter right now. You can wait and wait for the trend line break. You can wait for the trend line break, and also you can wait that the market is going to make additional lower lows, lower highs. Pickles, crown gives additional support of short here. Yes, but we are far away from crowns. Okay, we didn't learn yet. Okay, so as a beginner trader, I can enter here. Okay, but I must be aware that I'm entering a trade where the market is still above the uptrend line. So if I'm going to lose, this is going to be the technical reason. You know, I lost. Okay, I need to learn from my losers. I lost. Why did I lose? I lost because I entered where the bulls were still in power. Make sense? In this scenario, can we put stop loss in 1? You can do anything you want. It's your decision. But you must be aware of the rules and concepts. Zuelius, it's a great question. You can do anything you want, but if you put the stop loss above the number 1, you are risking that the market is going to retrace further and stop you out before it continues its extension. Make sense, Zuelius? Talking about structure or the market wave and the short-term trend, the safest place is above or below the extensions, not the retracements. Zeno, I want to enter, but I think that goes down to take it at lower prices, but it goes hard. What do I need to do? Easy answer. You need to learn structure and the short-term trends. Zeno, this is the easy one. You need to learn and you need to train. Okay, it's going to take some time. Great question. You need to learn and understand how structure moves and how the short-term trend moves, because not everything is relevant. It's all the same. No, it's not. Oh, structure and the trend is the same. No, it's not. There are big differences. Okay, so we are in a trade, everybody. Let's delete this. Let's see how this is going to play out. Okay, so I'm going to delete this one, delete this one. So we entered, so BMW and Zuelius and Pickles entered the market, shorting what it's supposed to be the next extension. Let's see how this is going to play out. Moving down, moving down, moving down, moving down. See, if you would go long, everybody, you would lose, right? Why? Because the retracement, it's over. Make sense? Extension, retracement, extension. So we were monitoring the short-term trend, making lower lows, lower highs. In this example, this currency pair could be the opposite direction, right? Take Canada JPY, take Most of the GBPs take whatever, you know, Euro JPY, okay? Those I remember, you know. And we were monitoring the down retracement, and then we spot that the short-term trend changed. So this is why we entered, okay? And what gives, now this is the learning part, everybody. What gives us money? I'm going to ask you a question, right? It's going to be a tricky one. For the beginner trader, okay, what gives us pips or money, right? What gives pips money? The entry or the stop loss? Golden nugget for you, everybody. It's a beginner trader question. What gives us pips and money? The correct entry, like, oh, I was right, or the stop loss level, meaning stop loss level up in here or stop loss level up in here? Entry. Anybody else? Zuelius, you weasel, right? But we know each other, so I would think everybody as a beginner trader that the entry is what is going to make me money. Let's be honest here, everybody. Who thinks that entries are the key? Both. Zorna, you are political, so yes, great answer. But who in here is a beginner trader and say, oh no, the entry, you know, I need to be right on the entry. Entry is the most important. I was thinking like this, everybody, don't be shy, you know, oh, I'm going to say something wrong. There is no right or wrong. But if you need to choose one or the other, you know, so everybody, what gives us pips and money, it's not the entry, it's the stop loss. The correct answer is the stop loss. And here is the difficult part, everybody. You need a series of 20, 30, 40 trades in order to understand this. It's not enough me telling you, because you are going to enter and the market is going to go your way and you are going to think, oh, I was right, you know, and our brain is going to think, oh, so this is it, you know, so it's the entry. But what happens many times, and some of you, if you have 6 months of experience in the markets, many times when you enter the market, something like this is going to happen. And here I want to make it, whoops. So something like this is going to happen. And if you put the stop loss in the wrong place, not this one, just give me a second, everybody, arrow, there you go. You know, many times the market is going to reverse and is going to find a deeper retracement. And if you put the stop loss in the wrong place, you are going to be stopped out. Okay? Those are going to be one of the last lessons in this course, how to form the strategy or the system. And we are going to learn the most important part is the determination of the stop loss. Where, when, how. Okay? Passion, I don't believe you. Cool. Find a professional trader, you know, not your cousin or uncle who is trading from the basement. Find the professional institutional trader and ask him, you know, Joe, what makes money, the entry or the stop loss? and come back to class and tell me, okay? The stop loss level, it's what makes the money and the pips. If you don't get your stops in the correct way, if you don't learn, now make no mistake, different patterns have different stop loss levels. It's not all the same. But if you don't learn correctly where to put your stops, then it's going to be difficult. Win, win, lose, 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 win, winner, loser, loser, winner, right? That's why we have traders, everybody. It's not uncommon to have traders trying for 2, 3, 4, 5, 6, 7 years and not making it. Not that they are not making any profits, but living from the market, like say, oh, I'm a professional, my money comes from the market, they are not making it. Stop loss is one. Make sense? The entry is, I don't believe you, not a problem. The entry is it's difficult to understand, but hopefully, at the end of the course, somewhere in December, you are going to have a bigger understanding, Say, oh, the man was right, the stop loss is the most important. How many percent of stop loss you do? Me personally, I'm using 0.5% per trade. And then from this, I'm building my position. Okay? But again, it's personal. You have traders using 0.5% per trade. You have traders risking 1% per trade. You have traders that professional one that risk 2% per trade, which in my opinion is too much, but it's just an opinion. It's personal. Okay? So Zuelius, stop loss number 2. Okay? You can put the stop loss number 1, just be aware, Now going back to the trade, right? So the market is doing something like this, and I'm going to delete this one. So this was our entry. Okay, we are following the market, and what's the time? Okay, let's say that I missed the opportunity, everybody. I was sleeping. Let's say that this is the 1 hour chart or 15-minute chart. So I was sleeping or I was walking the dogs and I lost the opportunity, and another opportunity comes along. This is what is called the counter trend line break. Okay, who would enter this trade? And where should the stop loss go? Who would enter this trade? Now, as for yesterday, we have different options, right? We have now one more stop loss. You can enter here and put the stop loss in here. This would be the stop loss number 3. Clone. Click, click. Okay. So this is the continuation of the yesterday's lesson. Yesterday we were talking mostly theory with the arrows, uptrend, downtrend. Zoom out, please. Sure. And if I'm going too fast, everybody just tell me, Passion, slow down. Explain one more time. Say it again. So we have another stop loss here, right? So I lost the train, yesterday we were talking that the best entries were end of retracement was the best entry, right? But we also addressed what happens where, so this would be the extension, this would be the retracement, right? And this would be the next extent. Whoops, this would be the next extension. And yesterday we were explaining to you that the best entry was the end of retracement. But we also explained to you that many times, you know, we are late. I was sleeping. This could be the 15-minute chart, 1 hour chart, 2 hour chart, 4 hour chart. You know, I was sleeping, I was working at my job, you know, whatever. I was walking the dogs, and when I opened the charts and the trading station, you know, the market is here. And we're talking about how to trade the short-term trends. So Zuelius, DMW, and Pickles are winning, so they are in the money, you know. But I was late to the party, you know. So can I enter? Should I enter? What would you do, everybody? You want to make some pips and money, right? Demo account first. Remember, those webinars are not trading or investment advice. So would you enter in here? And don't be shy or scared, everybody. There is no right or wrong. You can say, yes, I would enter. You can say, no, I would not. Seems too risky to me. You can say, I don't know. I prefer to wait. Right? There is no right or wrong. And then we are going to move to the lesson, today's lesson, which is market wave or market structure in higher time frames and smaller time frames. It's an extension. I would wait. Too risky to me at this point. Okay, great. So everybody, when you say it's risky, right, are you referring to the stop loss? You know? To the beginner level, everybody, okay? You need to understand something about structure, you know? So, and it's going to take some time, all right? As always, watch these recordings a few times. So here is the question, everybody, for the beginner trader, you know? If the structure or market wave is going to continue, what it must do. I'm here and I'm scared, right? So arrow, where is the arrow? I need the arrow. So arrow, I'm here, okay? And I see this opportunity, but I'm scared. I'm thinking, oh, this is risky, and it's okay. But if the structure or the market wave, meaning extension, retracement, extension, retracement, extension, is going to continue, what it must do? What it must do? I'm going to help everybody. So if this is a structural high quadrant, now let's make circles, right? So now we're going to, so circle, this is a structural high. All blue cannot, right? So let's make it green. And this is a structural low, and this is a structural high at the stop loss number 2, and this is a structural lower low, and it's not confirmed yet, but this is going to be, you know, it's a projection, but this it's like to be the next structural high. And if the structure or the market wave is going to continue, what the market must do? Zuelius pays the less structure lower low. Exactly. Retrace and pullback, yes, once the extension is over. DMW, you are correct, and Brian, you are correct, but it's going to do once the extension is over. Okay? So Zuelius got it right, everybody. The market must make another structural lower low. Make sense? Now, the reality of the market is the market can do anything it wants, you know, can go up and down and break structure and break trend lines and breaks Fibonacci's and break Ichimoku's, you know. But as I don't remember the name, you know, but we have, you know, those are statistical edges, you know, in a series of 100 trades, those kind of patterns work like 80%, you know, meaning this entry in here, if the stop loss is in the correct place, this entry, you know, 8 times out of 10 is going to win. So everybody, if you are scared as a beginner trader, and it's okay, it's normal, it's understandable, just bear in mind that the market, it must wave. Okay, so I am going to enter in here. Stop loss is going to be the stop loss number 2. Okay, not the stop loss number 3, not the stop loss number 1, stop loss number 2. Okay, now we were talking about yesterday risk reward ratios, right? So what changes from this trade to this trade? I need to manage my trade differently. Why is that? Because how can I show this to you? Let's change colors. So those were the first traders, right? So this was the entry and one purchase. So now if I'm entering in here, you know, this would be my stop loss just graphically. Just graphically, and I want to make 2, right? Clone. But as you can see, just going 1 for 1, I'm over the structural low. And you're right, everybody. Once the market makes a new lower low, talking about the market wave, talking about structure, a retracement is going to come sooner or later. So I cannot expect, you know, that the market is just going to fall and the market is going to be so generous, you know, and it's going to make me, you know, is going to give me the risk reward ratio 1/2. Make sense? So I am going to enter here because the market must fall until down here. It's a must. If, of course, the market's going to respect the down structure. Okay, the market can do anything it wants. So I'm here, I entered the market, you know, and I'm waiting. See, everybody, what is happening? If I would put the stop loss to the stop loss number 3, what would happen right now? What would happen? What would happen if I would put my stop loss on the stop loss number 3? What gives you money? It's not the entry. It's the correct stop loss level. Okay, so the market is here and the market is moving against me, and then sideways, you know, something, you know, and finally, see everybody how the market moves? Now for DMW and Zuelius and Pickles, it's not a problem, you know, they are having fun. But me, yes, we will be stopped out. But me, that I entered here and I put my stop loss in the safe place, stop loss number 2, but because risk reward ratio, it's a problem, everybody. Passion, this is difficult stuff. Watch these recordings 2 or 3 times, 4 times. take a pen and paper, learn, you know. So I'm seeing that the market broke the relevant low, right? You know, so I know that this is how the market behaves. It must come to a retracement. Okay, so what I'm going to do now that the market, or I can do this here, you know, I could be doing this here, you know, and what am I talking about? I'm going to adjust my stop because of the risk reward ratio, you know. So I'm not going to have my stop. I'm talking about the stop loss number 3, and I'm talking about the entry in here. So I'm not going to have my stop loss number 2, but the market, you know, if you look at the market, you can see what the market is doing, you know, low to high to low, right? And I entered here, you know, so I'm going to bring my stop loss to something like or break even or something like in here. Make sense, everybody? Oh, how do you know where to put your stop loss when you see something like this? It's your decision. It's your decision. Okay, you can leave it at the stop loss number 2, but one more time, you know, I would be naive if I would be just waiting for the market to give me that much of profit. So I need to secure my profits, and I need to protect myself. Because one thing was, you know, statistically, one thing was quite sure, you know. I mean, there are no guarantees, but statistically, you know, I could enter here because the market must make a new extension. And now that the market is here, I need to act, you know. And there is no right or wrong. You have traders waiting and the stop loss above the number 2. You have traders pocketing the profits in here. You have traders putting the stop loss on break even. And you have traders doing something like this. You know, because I don't know until where and when the market is going to fall. See, everybody? If I would profit take, which is okay, it's a style, you know, everybody it's a little bit different. If I would profit take, you know, I would be out, but look what the market did, you know. So I could be canceling and replacing my stop, and DMW and Zuelius and Pickles could be doing too, you know. We would lower, I mean, Pickles and DMW and Zuelius would exit in here, you know. The initial trade would give them, right? Would give them the market hit the, come on, trading view. So somewhere in here, the market would almost hit the 1 versus 2. And let me see, it's going to, so it reversed, right? So those kind of traders would exit where? Well, when the market would change the short-term trend or something like this. Me, that I was late to the party, you know, I was just cancel and replace my stop, you know. Every time that the market would go lower, you know, I would replace, and here I would be stopped out. Make sense, everybody? I know, too much information again in 1 hour, right? Beginner traders, too much information, right? Not a problem. Watch the recordings 2 or 3 times. If this is your first time, everybody, go back and watch lesson number 1, 2, 3, 4, 5. Adaptive stop loss and take profit, nice, yes sir. But we are going to learn this stuff, you know, not a problem. Okay. Homework for you, everybody. Homework for you. You have something like this, and this is the monthly chart, and this is the It doesn't matter, day trader, intraday trader, you know, scalper, yes, not relevant to the scalpers. This is the weekly chart. This is the, come on. This is the daily chart. And down in here is the 1 hour, 2 hour, 4 hour chart. BMW, what if I take my profits, then I re-enter after retracement? You can do this, but you must respect the risk-reward ratios. You cannot risk more than you are making. Okay, BMW, you can do this, but you must not risk more than you make. You need to pay attention to the risk-reward ratio. So everybody, the monthly chart, it's like this. Come on. The monthly chart, the monthly wave or the monthly structure is like this. The weekly, it's like this. Change colors. Okay, change. Not the right color, just give me a second, everybody. Here, there you go. Change color of this one too. Change color of this one too. Okay, the daily is like this. This would be the daily. Extension, retracement, extension, and then you would have something like this. And the 1 hour, 4 hour, 2 hour chart is going to be something like this. Okay, this is the homework until tomorrow. The question is how are you going to trade this right now on the 1 hour, 2 hour, 4 hour chart, long or short? Everybody, this is your homework until tomorrow. Tomorrow we are going to talk about this. It should be today's lesson, but we are almost out of time. So the monthly, it's like this. The weekly is showing you something different. The daily is showing you something different. And the 1, 2 or 4 hour chart is showing you something different. Those are 4 different charts on different time frames. For the beginner trader, how are you going to trade this right now? Long or short on the 1 hour, 2 hour, 4 hour chart? Homework. And today is what? We talked about next level number 1, next level number 2, next level number 3 today, everybody. In tomorrow, we're going to talk about all 4 of them. If you prefer coaching or mentorship, ask for it. Okay, we will talk about your specific needs and goals, and I will show you the way, but you must do the work. Okay, strict rules apply to coaching or mentorship, not the same as a course. Okay, strict rules apply. I don't have time to babysit you, and I'm not arrogant here, everybody. I simply don't have time. Okay, the course, it's something different. Coaching or mentorship, like, would you coach me or mentor me? It's like in sports, you know. I'm going to give you the homework, give you the do this, do this, do that. Okay, and I'm not arrogant. Okay, don't accept this like, oh, he's arrogant. I'm not. I don't have time. Okay, I would like to help you more, but I simply don't have time. And you are responsible for your own success. Okay, the bottom line is this: if your way is not working, why don't you try ours? So back to the chart. This is it for today. This is your homework, everybody. Until tomorrow, stay strong and trade with passion. This is Fxpassion signing off.